Welcome into the live stream today. We're going to be diving into Bitcoin. The market is in a wreck right now, as well as what the future of Ethereum and the merge holds for all of you out there holding Ethereum right now in your hands, waiting for this merge. Well, it's going to happen. It looks like we'll see a lot of things kind of playing this out. And of course, today we'll be breaking this down, of course, with our favorite macro analyst, and that, of course, is Mr. Gareth Soloway. Before we get started, though, my name is Paul Barron. Welcome back into TechPath. And as always, we have our great sponsor at the top of the hour, and that, of course, is Bybit. Big news for Bybit. They just hit 10 million users, and there is an absolute cool program they're running, which is 0 fees on all spot pairs. So you guys can, of course, jump over there, use our link below, because it does give us a little bit of credit on with Bybit. And obviously, if you're into really kind of a traditional, a non-traditional, I should say, trading platform, this is one of the best ones out there. It's one that I like to play with, and it's really kind of got some really cool aspects to it. Everything from copy trading. You can go, of course, get into some NFT side of things, and of course, do earn. There's a lot of cool features within Bybit. Make sure and use the link below. All right, so joining me today is Mr. Gareth Soloway. Great to have you back on the show, my man. Yep. We're gonna bring your audio in. There you are.
All right, there we go. Hey,
yeah.
It's so good to be here, buddy.
Yeah, okay, so Gareth, a couple of things we got to get out, and that is talking about the markets right now. Obviously, with Bitcoin, you know, we've seen a quick wick down here this morning on Tuesday, and midday, I guess, is really kind of time of show for you guys, of course, and we'll break down that and give you guys a little bit of a chart analysis. But the overall, when I look at just the general markets and where this is holding up against traditional, one of the things I wanted to focus on here today was this 60-40 strategy, which is on pace for its worst year since 1936. So again, traditional finance markets starting to see a lot more pressure on them. I'm kind of curious, do you see more traditional finance money moving into these on-risk assets right now? Or do you feel like it's because, I mean, I would look at this and say this isn't a good bet either way.
Yeah. So I mean, for me, what I'm seeing is that you do have some money that's still going the traditional route, but there's a lot of money that looks at it and says that's the old school way of doing it. And I think
Right.
the Wall Street Bets crowd, I mean, I think these newer investors are very much into doing things themselves, finding the next hidden gem, and they're trying to do it themselves. And again, that's positive and negative, right? If you don't know what you're doing, you can get hammered, but at the same time, maybe you can do better than the overall allocation.
This was a note that was in the article. It says the 17% rally off the June lows appears to have just been a typical bear market rally, which occurred, 1.5 times over the average of a bear market, which we see often. I'm kind of curious, do you think we'll see another rally in this cycle, especially for traditional finance? Because that could really play into not only Bitcoin, but obviously as ETH, and a lot of things around the Fed that we'll talk about. But what are your thoughts about another rally in this bear cycle?
Yeah, so I do think there will be more rallies in this bear cycle. I think this is going to turn out to be one of the longer bear cycles that we've experienced in a long, long time, mainly because if you look at the past bear markets, they've been shortened because of the Federal Reserve printing money, right, and stimulating, and the government stimulating. So I think that without that, it puts us in a kind of a serious situation that this could be an extended bear market. Now, a bear market is never fun, but it does offer opportunities. And I do think you will get multiple big rallies, 5, 10, even 15% rallies from low pivots. But again, it's going to be a stock picker's market, and you got to be nimble.
Yeah. Further in this article, it says September has seasonally been a weak month. We kind of all know that. Second weakest average return, hit rate of 56%, and then they expect more pain in the market with a 3,600 year-end forecast. That's a pretty painful number there. Do you feel that's pretty accurate?
Yeah, I actually so end of year, I think worst case we're going to 3,400. So I mean, I don't mean to be the bearer of potential negative news here, but if we actually just take a look at this chart, this is the S&P chart, the S&P 500. You can see that massive rally that you were just talking about, that bear market rally. And then look at how quickly we've given it up in less time. Now we have hit some support right in here. You can see these little pivot points. So this does mean that there is a chance we could get a short-term bounce here. But I'm still in the camp that I think, thinking about what the Fed is doing, how they're now unloading their balance sheet, they're raising interest rates, and they're likely going to raise at least by another 50 basis points in September. I think that you could, by year end or early 2023, retest the March or February 2020 highs right here before that COVID dip. So that's my target. And again, end of year, early 2023.
Interesting. Okay. All right. With that, obviously, you guys should be hitting the like button right now if you like Gareth on the show. He's one of our top analysts out there. That really breaks down a lot of where the trends are going, not only from a macro side, but also from more of an economic conditional side. And this is in comparison to a lot of other analysts. His understanding is pretty cool around what's happening in the market itself. I want to jump to a tweet quickly here. This headline is the first of what is to come. While it will take a while, the market economy will force all countries' central banks to get in line. South Korea pledges preemptive action on stabilizing markets. Good for risk assets in the near term. What do you mean by this?
Yeah, so near term, it's more that these headlines will trigger people to say, okay, governments and maybe central banks are willing to still step up and stimulate if things get too rocky out there. I think that this is just the very beginning, and if in the article it talks about very minimal kind of intervention, but the point is that if they're already willing to kind of come in a little bit, what happens when things get worse, and how many other central banks, how many other governments are willing to come to the rescue as you see the population start to kind of create this uproar? And again, we've seen this time and time again, how the more rough the period in the economy is, the politicians which have to be reelected, well, guess what? They just look at a 4-year span, at least here in the United States. So they're like, well, we got to print because I need to get reelected. And you'll see more and more of that. Now, I still think there's a rough road to go, but there will be a pivot point where you even see the US, the UK, Europe, Japan, they're all going to start to do this.
Yeah. Well, almost out of necessity, because obviously the pressure in Europe, which we'll get to here in a second, is pretty significant. Before we jump to the charts, I want to jump over here to an article quickly on Lynn Alden. So she's been on our show before, and Lynn's a great analyst. She really gets into the depth. Granted, I would say she is a Bitcoin maxi, so take that with some grain of salt here. But some of the things they pointed out on what she said in this video, and until they actually fix the supply side of certain things like energy, especially commodities broadly and logistics infrastructure, all that, it's hard to have a more persistent fix to the inflationary problem. That being said, when you look at Powell's speech a couple of weeks ago at Jackson Hole, I mean, he was still putting a lot of pressure on the potential of what will happen. What is your anticipation for the CPI leading up to the FOMC at the end of the month?
So I do think, just like we saw a jobs number that came in a little bit better than expected, kind of in that Goldilocks range, I do think you're going to see a continued kind of relaxation of the CPI numbers. And I think that's going to give the Fed that ability to say, hey, listen, we're still going to keep the pedal to the metal. We're still going to do 50 basis points in September. But I think you're going to see the economy weaken more and more towards the end of the year. And they're going to back off to the point where my guess is only another 25 basis points into year end. Now, the problem here is, number one, that's going to be viewed as very bullish for risk assets in the near term, until we slip into a recession. And the market and all the investors out there, they look around and they say, okay, Fed, we're in a recession. Come get us out of this now. And the Fed's going to say, well, it's not a depression yet, so we're not going to, with inflation still at 4, 5, 6%, we are not going to print, and that's going to freak the markets out. The market is so addicted to knowing that the Fed is like the parents, right? And they have this little kid, and they, the kid falls, and the parents kind of just catch them. But at some point, the Fed is going to be handcuffed, and I think that point is coming late this year, early next year.
So with that being the case, and it goes back to her point, in the long run, central banks will be unable to preserve positive interest rates, mainly because of the high level of public debt, obviously burdening the developed economies. And then she's in an obvious position going for Bitcoin as the on-risk asset long-term for the long run, because this is going to obviously present some opportunities with Bitcoin. We're seeing one today happen right now, literally. And I do want to jump to the charts on that, because we'll probably catch some of this happening live. When you look at Bitcoin's fall off here this morning from what was in the 19s comfortably and has now dipped under 19,000, and started to hurt our own predictions here on this side of things as well. What are your thoughts right now with Bitcoin as where it's standing currently?
Yeah, so I mean, today is definitely on a technical basis not a great situation. Now, I will give Bitcoin credit, right? We've seen the dollar continue to ratchet up day after day after day, and Bitcoin was just going sideways. So you could actually say, okay, Bitcoin was holding up. But I look at today's up move in the dollar as potentially the straw that broke the camel's back with Bitcoin. It's just so much pressure from a rising dollar and risk assets. I mean, we've seen the stock market rolling over, and Bitcoin for the last 10 days or so has just gone sideways. So it was
Yeah.
almost inevitable if the dollar was going to keep going up, that at some point we were going to break down here. And you could see a nasty red candle here. Now
Yeah.
we do have potential support coming in around 17.5. That's going to be a
Hmm.
big level. That's the June low. But my guess is that could be where we're headed at this point. But again, I was optimistic the last few days, looking at Bitcoin holding up and holding up for multiple days. And today's kind of like the wind coming out of the sails, if you will.
Yeah. There are some things that are being looked at as the potential catalyst for what we're seeing currently in the markets, especially the risk asset markets. One, of course, is what's happening with the ETH merge. We'll get into that here in kind of the second half. But also, you've got a lot of things happening globally. And back to the point of the strength of the dollar, which is back to your point, you would see the fall off in these risk assets when you continue to see the strengthening dollar. And with that being the point, I was referring to a tweet here by Alf, Macro Alf. You guys have not followed the Macro Compass. He's been on our show a couple times, and he talks here about this speech by Putin, economy of imaginary wealth being inevitably replaced by the economy of real and hard assets. So his big pressure right now is his belief is that there's going to be more pressure in Europe, which is going to continue to push the euro in a spiral down. What would make Europe finally be in a position to say, okay, we've had enough? Obviously, the issue with potentially gas shortages kind of running in there and all those kinds of scenarios falling into the EU. Would that be it? Or do you feel it'd be more of an economic pressure where we start to see a little bit more pressure on the people?
Yeah, so I do think that it's going to be a scenario where you're going to have to see major economic hardships for them to kind of throw in the towel, if you will. So you have the whole rest of the world, well, not the whole rest of the world, but the U.S. specifically, that's sending natural gas over there as much as they can, driving it over there. Because again, the U.S. looks at it like, listen, we can't let them give in, or otherwise Putin essentially wins the energy war, which is going on right now. So I do think it's going to have to be economic, and I do think that this is going to, it's one of those weird things where you have this short-term issue, but I do believe Putin's making a long-term miscalculation here, because this pressure that they're putting on the rest of the world, it is going to drive alternate energy faster. More, I mean, you already saw
Yeah.
what passed in the U.S., and it's going to put a situation where in 10 years, the rest of the world is going to say, okay, we've got so much renewables, or we started drilling again, or we started doing all this, that we don't need you anymore as much. And I think that's the long-term goal that I think he's miscalculating here.
Well, and I think back to now we're getting into geopolitics, but when you look at the position around midterms, if we do get the Republicans back in the House and the Senate, the likelihood is we'll probably see fracking open back up. We most likely will see some alternative scenarios on nuclear as well, which could really start to pull the pressure off of the need, at least here domestically, for energy. And that being the case, could have kind of forced the United States' hand and put Russia kind of in a bad position with Europe along with the US as well, as we
Yep.
see the pressures coming off of the rest of the world, because there will be other voids in the energy crisis scenario, whether it's Saudi or if you look at the Middle East in general, and where that oil is going to be going. They're going to be looking for new buyers, which is going to go
Yeah.
into the market right there with Russia's oil, competing with whether you're looking at Pakistan or what's happening in India or even in China, and the needs for it. Again, back to the point that you're mentioning there, that it could be a bad play by
And
Putin.
I would just like to interject too, and I think that what's important here is price action, right? And
Yeah.
and basically what you saw on Friday. So Friday afternoon, we heard about Nord Stream 1 being shut down and how it
Down
was
to
going to be
zero.
very detrimental. Right, zero, right, 100% zero. So one of the things I looked at there is I was like, okay, well, natural gas should be surging, right? And natural
Hmm.
gas did not. In fact, it was down that day. And if you look at today's chart, you are seeing a big collapse in natural gas. Natural gas is down almost 9% on the day. And as a technician, I say, okay, Well, the market's basically calling the bluff here and saying that right now they're going to figure out alternatives, and Russia's not going to have that ability to kind of be able to get Europe to throw in the towel. So very interesting here to look at price action.
And this is important, everyone, because we're talking about what are the catalysts that cause enough pressure in the Western countries, which are really the dominant factors within these risk asset sectors, as well as the traditional finance sector. So all these things really matter because they are kind of a domino effect. If you look at Sven Heyrick, this is Northman Trader, he's talking about do only 50 basis points and cause the euro to collapse further, and with it the dollar being higher. So he's saying maybe, back to your point, is do we see a little bit of light on the, so I guess the question will be, do we see a 75 at the end of this month, September, and then a lighter of the last quarters in terms of basis points, but continued pressure on the euro, which would obviously cause the dollar to go higher? What are your thoughts on how that might play out?
Yeah, so I have it penciled at only a 50 basis point in September. And I think, again, the last jobs report gave the Fed that little door opening. And I think the Fed is very aware here, right? So the Fed is aware that they can't stimulate if they push us into a recession and it gets bad. So even though they have to talk a tough game because they have to keep expectations high so the equity markets don't surge, and which creates more inflation, they also can't overdo it. And I think they're looking to kind of take a back step. Now, remember, they've just started this month unloading their balance sheet. So in a weird way, that's tightening as well. So they have to be really careful here not to do 75 basis points, unload $1 trillion from their balance. I mean, there's a lot here that could go wrong. And so that's where I am at, where I think that the Fed will probably start to do that 50 and then maybe 25 the rest of the year, and kind of let's see how it plays out. I think the markets have priced in more. So I think there's a technical risk asset bounce that when the markets start to see 50 basis points is only coming and maybe only 25 or 50 into year end, then the markets will say, okay, let's breathe a sigh of relief. That will be the relief until we slip into recession, when they're like, oh my goodness, now how do we get out of this?
All right, so what Gareth just said there, guys, is very important because there's some potential plays here that could be very interesting. Gareth, I want to jump back to your Bitcoin chart here, to that example. Is the scenario of the resistance around 17K or so? The big question I have for you is going to be, let's go ahead and bring that, the big question I have for you is, if we were to penetrate the 17K resistance level, I think 17, whatever it was, I think 17.26 or something, where is the next stop for Bitcoin? Because I'm thinking there's a couple of things that could pressure this down, maybe some trouble with ETH merge, possibly bad CPI or not as good CPI numbers, all leading in. Or do you feel like we might see a small flash crash that we're in right now in the short term before the end of September numbers come in?
Yeah, so I do think there's a chance of a flush. And I think the key here is understanding there's a few different things that are mixing. Now, if we take out the 17.5-ish low here, there's not a lot of support until you get down to 13 to 12,000, which is my high-end target for Bitcoin. And the kicker here is we have to remember there's still 150,000 Bitcoin, I think, from Mt. Gox that could be unloaded at any one time. That's a lot of Bitcoin, especially when you're at these lower prices for pressure. In addition, I think you have to be very aware that at some point we're going to get news from the judge in the Ripple case. How is Gary Gensler going to say that, all these other coins are securities? What rules do they have to kind of abide by? And I think all of these combined with a strong dollar leave Bitcoin and other cryptos very vulnerable to kind of one of those bigger quick flushes that could take us down to that level. So I do think that level is a huge bounce opportunity. I don't know if we'll get there before we get down to, we get the Fed coming in here in late September, but I think it is a possibility.
All right, so good possibility. Obviously, some of the things that you guys know that I do on my own behalf in terms of how we invest is we're always looking for, in my particular strategy, is looking for those $1,000 increments, especially under 20K, trying to do a dollar cost average in there. I'm not putting in everything at once, but finding a way into Bitcoin or some of the other assets that I do like as we start to see that structure kind of come down. Let's talk about Ethereum, because that is obviously on everybody's lips right now. We've got the completion of the Bellatrix, which is obviously in its final pre-merge stage, and it went off somewhat without a hitch. We haven't seen any major scenarios come up from the development team within Ethereum. Obviously, the Paris upgrade will be next. What are your thoughts around this? Now, so many people are, halting trading, basically putting a kibosh on almost any kind of ERC20 token movement within the ecosystem. How do you think this plays out for Ethereum in the near term?
So I think there's still that potential that you could see some upside in Ethereum in the near term. And interestingly enough, the chart has a potential breakout here just above this downsloping trend line. So you can see that even, and by the way, this is really interesting because what we've seen in Bitcoin is that the low from basically 10 days ago was already breached. But you can clearly see that Ethereum has actually moved above this trend line and is well off of these lows. So to me, I look at that as a short-term relative strength indicator versus Bitcoin specifically. So I think that, again, there's a lot of hype. I think what Ethereum is doing is awesome. I think it's the right move here. And I think ultimately that in the near term, you could see some price pressure to the upside, maybe even retesting the near highs here of 2000 on Ethereum. But again, I would just caution and say that depending on the regulation we find out about, that would be a concern. That would be a risk factor that you'd want to be a little careful over the next multiple months holding on to a ton of Ethereum.
Yeah, so that what I think you're alluding to is if this is deemed a security, if we
Yeah.
do see kind of the shift of what Gensler and the SEC has talked about Ethereum being a commodity, and potentially now kind of backtracking that, walking it back slightly in a couple of other comments that he's made since, is that we could see that occur, especially as we go to proof of work, which could cause some less decentralization nature within Ethereum. A lot of people will argue that point. I know there's a ton of ETH maxis that says no, it's going to continue to be a very decentralized, but we've kind of seen a potential challenge there that really could kind of change that out. If you look at some of the things that are happening right now, Binance, of course, is temporarily suspending ETH and the wrapped ETH deposits and withdrawals, and this, of course, all coming ahead of the merge. Liquidity may become an issue, and we talked about this earlier today in our previous episode, is that we could see a DeFi meltdown in the short period of time. Question is whether or not you'll be able to get in and out of exchanges, and or how do you manage through the process as we start to see the merge take place. And I think a lot of people, if you're holding Ethereum, you're probably going to hold through. Some people maybe like me, where I'm trying to trade on it, and in doing so, you kind of have to move it into some very interesting places to get that done. Let's assume a couple of scenarios here, Gareth. We get an Ethereum merge flawless. It hits all cylinders. We wake up the next morning and boom, proof of work is in place. All wallets are secure, and we're moving in a new market on ETH. What happens to ETH at that point?
I think the immediate reaction is a sigh of relief, right? Okay, it's done. It's gone smoothly. You'll probably see a pop to the upside. And again, I'm hopeful that that happens because I think crypto has taken so many punches over the last few months. I mean, even what happened with Michael Saylor and the taxes and all that stuff. It's just one more thing that makes people kind of like, oh, what's this crypto? Is it kind of shady? What's going on? So I'm really hopeful this goes smoothly. If it does, you get a short-term relief rally to the upside. Maybe that 2000 handle would be where it goes. In fact, the 200 moving average is just above that double top high there. So that would also be a general target. Then after that, I think eyes turn back to the general crypto market, to regulation, and to overall risk assets. And I think that's where it could be. So you could get this short-term relief, but then just be careful beyond that if the whole risk market starts to come in.
Yeah, and I think the scenario will be obviously with regulation kind of playing after that point, because we are going to be moving into midterms. I think new framework will start to come out of Capitol Hill in terms of the aspect of what crypto is going to be looked like. And let's not forget that this is the week also that Biden's task force, so to speak, on crypto is answering a lot of questions. So now if they get some of them into Capitol Hill and to lawmakers to where at least some things are moving around, it'll be interesting to see what the results will be around the framework of Ethereum itself. So it's going to be a cool one to watch. Ethereum, though, crosses half a Bitcoin now. So we've talked about this on the show before. Could we see Ethereum actually flip Bitcoin? Big question here, obviously, with proof of work. The popularity of this token around the aspect of such a big ecosystem. Do you think that's ever in the cards?
I actually do think there's a decent chance of it. I mean, if you look at the permeation in crypto of Ethereum and how many things are built on it, I mean, it's essentially the Apple of crypto. Now, I think you look at Bitcoin, and to me, I'm like, okay, Bitcoin is gold, and now Apple or Microsoft would be Ethereum. And I do think there's
Yeah.
a lot of upside here down the line. So I am optimistic that it does have a shot of it.
I wanted to show a tweet here, kind of verifying, or not verifying, but it's kind of giving you an example of ETH attempting to break out a range. This is something you just pointed out. Last time it did so, it doubled relative to Bitcoin. If it doubles again relative to Bitcoin, it will flip it. Of course, obviously, will Bitcoiners let it happen, or will they mercilessly pump Bitcoin to stop the ratio from getting worse? I don't know. This will be an interesting, because I do think maxis are in control of Bitcoin personally. That's my own
Yeah.
theory, and where it is really being held, and what it might do with Ethereum taking the lead spot there for sure. Any points that you're watching right now in terms of any ERC20 tokens out within there? I mean, we've got Polygon obviously has been surging. The alternatives with both Solana, even Avalanche to a certain respect, they had even corrected off of some bad news they had last week. Are there any other ERC20 tokens that you think might come along for the ride, or alternative L1s?
Yeah, so I think Polygon is definitely interesting, right? And one of the things I've been paying attention to on the chart is, number one, the chart of Polygon has had a big move up off of the lows and is actually going sideways, creating somewhat of a bullish channel here. So as long as you hold this lower end around 74 cents or so, to me, this is a very interesting potential bullish consolidation pattern for maybe a breakout. Breakout target would be about $1.35 here, which would retest these low pivots. But again, I think that again, you're seeing a lot of excitement around it. I would want to see, once the excitement kind of goes away or starts to fade, do these things hold up, and just follow the technical lines. As long as it's within this range or above here, it's good to go. If it breaks that 74-cent level, then you want to be very, very careful.
Yeah, I think that's going to be the scenario. We are going to take some questions, so make sure and drop them in over on the sidebar. We'll try to get to as many as we can on that. Just as a reminder for you guys, when you are on YouTube right now, maybe this is the first time you've been on our channel. If it is, and you're watching this, just go to our YouTube page there, and there's a section right there. You'll see that little bell right there. I'm going to hit it, and you'll notice that little one that says all. That's the one we want, because that's going to give you notifications of live streams, just like what you're talking or seeing right now. And it's the best way to really kind of get us into your feed if you want to catch more and more content. And of course, it's a great time to hit that like button. We will jump into it. I want to get to a couple of questions, but before we do, let's take a look at the poll. I think we got one coming in. All right, so here we go. Will exchanges halting ETH transactions affect a possible pre-merge rally? So yes, too much certainty. Most people, uncertainty. And no, everyone will FOMO in at 40%. So it seems like the audience is saying that we won't necessarily see the pre-merge rally. I know what that means for you.
So again, I think no. So number one, I kind of agree partially with that. In that,
What?
I
Whoa,
think
whoa,
that,
whoa! Wait a minute. Gareth is agreeing with the audience. What? Okay, we got to stop the show.
well,
It's over.
so I know, right? But yeah, so I think that it does create a little uncertainty. We know that we've seen other, during bad periods in crypto, halting of trading and not allowing money to be taken out. That does create this kind of question mark. But I think that it also gives us an opportunity to say, okay, well, then the rally could come in if it goes smoothly. Let's say all of these things get opened back up, and then everyone says, okay, it's done, it's in there. I wasn't able to buy prior. Everything went smoothly. There's your buying opportunity. There's your big spike.
Gareth, do you think we are seeing, because we hear and watch these big institutions sitting on the sidelines, they're probably watching this proof of stake transition occur, maybe setting back and understanding that ETH is a class they want to be in terms of the asset itself. Could we see bigger institutions that are out there in crypto today actually waiting on the sidelines and ready to take a pounce on Ethereum once we see the merge occur?
I do think that that will happen to some extent, but I really think that the big money, and we're talking the big epic hedge fund money, it's all about to them regulation and
Regulation.
understanding the rules. And I think that that comes down to it. And it sounds crazy, but I can't wait for them just to give us these regulations, give us these rules so that big
Hmm.
money can decide if they want to get in or not and make at least a logical decision. But the gray is the worst scenario of all for cryptocurrency. And I honestly think that's why crypto has underperformed the stock market in its recent bounce, is because you just don't have money that big money that was willing to take a shot here.
That's an interesting insight, because if we do get regulation, good, bad, neutral, at least it's at least a framework in which the markets can start to work
Yep.
with.
The
If
markets want certainty, right? We
Yeah,
know that from stocks. Everything comes down to just knowing the rules, and then money can make that decision.
yeah, and at that point, it really will get interesting, because I think at that point, this is something we've talked about here on the show. If there is a time in which crypto will detach away from traditional markets, I think that's when it occurs. When we see
Yes.
true, whether it is Ethereum being deemed as a security or not, or we see a settlement with XRP, which would give us a little bit of line within the SEC, or we see an actual regulatory guideline come out that can be locked in from Capitol Hill. I think this is all in the right tune for where the future of where this is going to go. Let's get to a few questions here, and then we'll kind of wrap up. Okay, so I got David King coming in. He says, if there are issues during the merge, could it positively affect something like Cardano's Basel hard fork, which is later this month? Now, I look at Cardano, as you guys know, I invest in it, and then I use it as a trading token. I buy it, and I jump out, I come back in, and it's not one that I look at long term. I am looking at what this might play out for the Basel hard fork, which is after the merge itself. I don't necessarily think it would be a bad thing, but it will depend. If the merge goes super smooth, I don't know. I feel like some of the other tokens may suffer a little bit. What are your thoughts on that?
Yeah. No, I think that the two scenarios, number one, the smoothness of something can be uplifting for the whole crypto sector. So I think that could be a positive thing. But likewise, I think that any sort of hiccups, and you have Ethereum, the biggest, the biggest alt, if you will, of the group, if they're having issues, what hope do other players have or other
Yeah,
coins have to have
yeah.
something smooth? And I do think it's all about, at this point, perception in the crypto market. And if things go wrong with the ETH merge, I think that's a problem. And by the way, I think that's why the merge has been delayed, and kind of because
Oh, for
they
sure.
know that everything is riding on this merge.
Yeah, this is a big one. This is like Super Bowl Sunday for crypto
Yeah.
for sure. This is a make it or break it kind of scenario. We have another poll, also a second poll coming in from the audience here. Let's take a look at this one. What extreme cases will happen first? ETH to 850 or ETH to 2,500? I'm going to leave that one to you, Gareth.
Oh man, you're killing me with these. So I was in the 850 camp before 2500. I think 2100 is my max upside right now.
Uh-huh.
But now that everyone's going the other way, I feel like I got to go for the 2500.
Oh, geez. Okay, here we go. To 2,500. Okay, that's above my number, which has been around 22. Uh,
Yeah.
of if we get a smooth merge and we get a little bit
Yeah.
of run in, because I just feel like the macro pressures are undeniable. You just
It's
cannot
so hard.
pierce. Yeah, you can't pierce that veil for sure. All right, a couple of questions here. There's a couple of good ones here. I think whatever the support that ETH is currently holding will be invalid if Bitcoin loses the current support, meaning around the 17K mark. What do you think about that? If we
So
lose
I'm
that
not sure if
17K, which was our last
yeah,
low,
so
that June low.
Yeah, so I'm not convinced of that. I think the merge going smoothly can create more downside in Bitcoin, or Bitcoin downside can occur. And then I think that Ethereum can retrace maybe back to a double bottom. It has a small
Mm.
chance of holding that, but I do think that this is now potentially something that can help Ethereum hold up better than Bitcoin. So I'd be in the camp of thinking that, we're so far off that double bottom, which was around $880 on Ethereum. I think that
Yeah.
it's very possible that could be when Bitcoin hits 12 to 13,000. That could be where Ethereum goes back to.
Ooh, interesting. That is big alpha right there. All right, Dark
Yeah.
coming in. Guys, should I buy crypto before or after the merge? Listen, guys, we're not giving financial advice. Everybody's portfolio is different. I'm sorry, we're not going to cop out on that. I can tell you what I'm doing. So I am buying the dip. When I say dips, anytime that Bitcoin starts giving me an 18K Bitcoin, if we get a 17K, I'll be in there. Right now with Ethereum kind of adjusting a little bit, as Gareth has kind of alluded to, and myself, there might be some potential swing trades in here for me. But again, always, you guys should do your own research, as we always recommend, not financial advice. So just think about that. Brad M comes in. You know you're in a bear market when a $500 increase in Bitcoin is considered a pump. I don't know. We like those kind of moves, that's for sure. Here's one right here. Darian comes in. What do you think about the U.S. 10-year Treasury and mortgage rate effects? What are your thoughts on that as we start to see that flow out in Q3 and 4?
Yeah, so number one, the 10-year has been on a rip-roaring rally today alone. I mean, up to 3.334 at this point. The one thing I would point out, and this is something that I talked about a week ago or so as well, is that we saw a high on the 10-year at 3.5% back in June, right? And even with the hawkish Jackson Hole comments, yields have not taken that out. And that tells me the bond market is calling his bluff, saying, hey, listen, he's not as hawkish as he may have come across. And so I do think that this type of setup, it looks very similar to Bitcoin's double top. So I could see us going to 3.5, 3.55 top, 5 high on the 10-year, and then rolling over and having a big move down.
I know the answer to this question, but I want to put it up on screen. This comes in from Renee Aguilar. Question for Gareth. ETH possible ATA all-time high and ATL timelines in September. I don't know if all-time low would come in for sure. I feel like an all-time high is not within sight right now just because of the macro impacts and market conditions as a whole. I'm assuming you'd be with me on that one.
Very much. I think you start expecting the next bull run when we get in a situation where things have gotten bad in the economy to the point where the Fed could potentially start printing again, or stimulus from the government. That will be the turning point. And again, I don't know if that's 2023, 2024, but that's where I would say that's the turning point.
For sure, Joey A. Crypto is definitely going to imagine how dominant the downside crowd is right now. I would agree. Contrarians already know what's happening pre-Vasil and Merge. I know he's talking about Cardano to a certain extent, but crypto in general, I think there's some validity within that. This coming in from Delta 9. Gareth, will the ultimate Bitcoin bottom more likely be a slow bleed with plenty of time to accumulate, or a quick wick down? What are your thoughts on that? We took a pretty hard wick this morning.
Yeah, it has been. But I honestly don't think the lows are in yet on Bitcoin. I still think 12, 13,000 at minimum, that's where we're headed, just because of the macro structure and all the other issues out there. But I think that, again, you'll see what we usually see is that the final flush will be a quick drop, but then you'll get a little bounce and a lot of sideways chop where you see bulls and bears kind of fighting it out. People say, oh, Bitcoin's not going to be anything. Oh, and then you have other people saying Bitcoin's a great buy here. And you could see that, by the way, back in 2018. We saw a long period of just sideways chop before the next bull market started up. So I kind of expect the same thing. If you look back at 2009, you did see like kind of a consistent grind higher, but it wasn't like a shooting star right back to the upside.
Interesting. All right. So with that being the case, if we do see a 12 or 13K Bitcoin, where do you think Ethereum would fall from there?
So I think my guess is if we get down to 12,000 on Bitcoin, Ethereum probably gets back towards that 800 to 900 lows.
All right. So back into it's what was its most recent local low.
But one thing to keep in mind is that's actually bullish for Ethereum, right? I mean, if you have Bitcoin dropping, 50% more from where it was, and then you have Ethereum only retesting its double bottom, that's actually very bullish for Ethereum.
Yeah, and I think you're right. There are going to be some very interesting ways around this. The only thing that I think stands in the way right now of Ethereum is regulation. That will be the next either plus or minus to the Ethereum ecosystem as a whole, and obviously we'll be reporting on all that good stuff here. Last point to you, Gareth, when you look at the rest of the month here, we've got CPI numbers coming in. You're still looking at potentially a 50 basis points from Chair Powell here on the FOMC for September.
Yeah, correct. So 50
Yep.
basis points is what I have factored in. I think, again, the jobs number gave us just that glimmer of kind of the perfect number where he doesn't
Mhm.
have to do 75 again. And I think he
Yep.
is going to be very, very careful here as he's getting towards the end of this and you're seeing the economy start to weaken, jobs just beginning to show that lagging indicator starting to weaken. He's got to be unbelievably careful he doesn't force us into a recession, because that's where they can't get us out with. They can't print us out of
You're
a
right.
recession. And
Yep.
so the question is, if it starts to get worse and we go from a level 1 recession to a 3 or a 5 or a 7,
Mhm.
what on earth do we do? And
Yeah.
that's the tricky scenario.
Yeah, that's the one that I think a lot of, in general, a lot of economists have looked at and are concerned with. We've had several macroeconomists here on our show over the last few weeks, and they're all kind of pointing in this direction, is that we do, and there are some of them. Now, granted, just here recently we had Darius Dale on. He was kind of a little bit on the contrarian viewpoint, even though it was still with some pain, not as deep a cut. So there are some different viewpoints out there for sure. There's definitely some interesting aspects of what's happening in the market right now. We're going to definitely keep you guys tuned in to all this good stuff. So it's going to be a fun one for sure. And of course, Gareth, you know, you're always so up, even no matter what is happening in the markets. It feels like every time you and I talk, there is carnage in the markets.
There is.
Every time.
Well,
Anyway.
I got this new Bitcoin shirt, and when I finally think Bitcoin has bottomed, I'm going to wear it on your program, and you'll
Bam!
know.
There you go. I like it. Gareth, thanks again for stopping in. We appreciate it, man.
Thank you, Paul. Have a great one.
All right. Okay, you guys are tuned in maybe over on the podcast side of things right now. Guess what? You missed one of these live streams that we do here on YouTube. This is the place where we really get into the deep dives. We do a lot of a technical analysis. We do a lot of the macro side of things when we understand not only what is happening on the global stage, but also in looking at analysts really kind of break down where the future of these risk assets are going, but how this may play into the traditional markets. So make sure and jump over here to the YouTube channel. You'll find us all over here. And it's really easy. Just like and subscribe on a few videos and you'll get us in your feed. It's that simple. All right, if you guys are not in on the Diamond Circle, click the link below. It's really easy and it's free. It's the best way to communicate with us. We drop a couple of emails, do a few more additional content pieces that come out only via the Diamond Circle and our mastermind group. So make sure and check that all out. If you guys want to reach me, it is out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.